What's going on, guys? So today we're going to be going over bootcamp day 3, which is trends. We're going to be going over break of structure a little bit. We're going to identify them. What are trends? Why are they important? Etc. So let's get into it. Basically, there are two types of trends that we are looking for. There is an uptrend and a downtrend. The reason why trends are important is because it's how the market moves. The market trends up, it trends down, and the other way it will move is it will consolidate. So with that being said, an uptrend is one of the trends, obviously. So an uptrend is made of higher highs and higher lows. That is a constant with all uptrends and all downtrends. It's the most basic kind of principle of it is uptrend is made of higher highs and higher lows. A downtrend is made up of, you might have guessed it already, lower highs and lower lows. So the exact same thing, just opposite. So I'm going to point out what that looks like on this diagram that I drew like a 5-year-old. So let's get started. This is an uptrend. An uptrend consists, like I said, of a higher high, higher low, higher high, higher low, higher high, and a higher low, and another higher high until the trend ends. I drew this in lines. It's going to look slightly different on the charts. It's going to have candles instead, obviously, because candles tell us more information. We're not going to be analyzing the charts in lines. But yeah, so we're going to be looking for a pattern of higher highs and higher lows in the charts. I'm going to go over that right after I go over the downtrend. So a downtrend is made up of lower highs and lower lows. In this drawing, it looks like this. So lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? Now that we have that established of what it generally should look like for an uptrend and a downtrend, right? I'm going to go through a few examples on the charts. So I'm just going to go on the 5-minute time frame to try to find some relatively clean examples. I guess, yeah, that's fine. That's a perfect example. Great. Cool. Okay. So right here, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then we break structure to the upside technically, which is what we're going to go through next. But don't worry about that just yet. Then again, you can see right here, technically lower low, lower high, lower low, lower high, lower low, lower high, make another lower low eventually down here, etc. So overall, what it kind of should look like, I'm going to switch it to lines so you can kind of see the correlation between what I drew and the candles. As we make a lower low, then we make a lower high, then we make a lower low, another lower high, lower low, lower high, etc. So we have that kind of pattern of slowly, running whatever direction, retracing a little bit, running again, retracing, running, retracing, etc. So that's what that kind of looks like in terms of a downtrend. In terms of an uptrend is obviously pretty similar, except just the opposite. So just trying to find very obvious examples to make it very easy to understand. Just want to make it really obvious. Cool. Right here, we have a higher high, we have a higher low, a higher high, higher low, higher high, higher low, higher high, and then we consolidate a little bit. Don't worry about that. Just try to mainly focus on the trends. So let me go here, just so you can see the line kind of diagram again. So we have the higher high, we got the higher low, the higher high again, the higher low, higher high, higher low, higher high, higher low. It does not always have to look like an exact perfect, um, like this. It doesn't always have to look perfectly like this. It can look like that. It can look like that. It can look like that. It doesn't have to be a perfect, up, down, up, down, up, down, up, down, up, down. It can be up, then it can be down, then it can be up a little bit, then it can be down, but not taking the previous swing low and then go higher again. The market moves in the overall trend. It is a overall kind of image, the way I drew it, to kind of understand what it should kind of look like, but it is not everything looks exactly like that. But I'm sure you're going to figure this out as you go through it. So here's another downtrend, lower low, lower high, lower low, lower high, lower low, lower high, etc., and so on and so forth, and we consolidate, right? Cool. Trends are pretty basic and pretty obvious. I'm sure you probably already could have made an inference and figure out what a trend was, but I just wanted to give you the technicalities on it and kind of point it out because it is how the market moves. It is really important to understand. So in terms of trends, an uptrend is made of higher highs and higher lows, and a downtrend is made of lower highs and lower lows. Okay? Now that we have that fully established, what I want to go through next is going to be this red and blue over here. It is a break of structure. Now that we've established what trends are, right, how can we identify when a trend has flipped from maybe an uptrend to a downtrend or a downtrend to an uptrend, right? We need to be able to identify that because it's key in trading. We have to be able to know if the market's flipping directions. It's a very crucial thing. So I'm going to go through it here, like how I did them initially. Go through it with this diagram, and then I'm going to go through it with on the charts and give you a few examples of each. So let's get into it. A break of structure is an indication that the trend has flipped. So when you are looking for an uptrend to a downtrend, you're looking for a candle closure below the wick of the previous swing low, which is a pattern that will look like, I'm going to use this blue here because it is a good kind of thing, maybe a little, I don't know, saying you say to yourself or something you are writing down that you're looking for. So I'm going to go over the uptrend of the downtrend first, and then I'm going to go over the downtrend of the uptrend next. So just right here, right? The important detail that you might have noticed when you were reading that is that the candle closure below the wick of the previous swing low. Remember, we were talking about candles before, so we are not looking for a candle closure below the body of the candle. We are looking for a candle closure below the wick. I drew this little line right here to represent a wick. Obviously, we're using lines, so it's not the exact representation, but I'm sure that you can kind of understand what I'm trying to get across. So let's go over it. Right here, we're in an uptrend, right? We already established that higher high, higher low, higher high, higher low, higher high, higher low, higher high. But then what happens? Well, right here, this is the previous swing low, right, that we talked about. This is the previous swing low, previous swing low. Cool. Sorry if I'm repeating myself. I'm trying to, get this across in the best way I can, and I'm probably going to repeat a couple things because I really just want to drill it in and get the, the higher high, higher low, and the lower low, lower high just drilled into your brain because it's important. But anyways, when we're looking for a break of structure, this is the previous swing low. Imagine this is a candle closure right here below the wick, right? This would be considered a break of structure to the downside. So now that we have identified that we're in an uptrend, in order to identify that we are flipping to a downtrend, we're looking for a break of structure, which is represented by a candle closure below the wick of the previous swing low. Okay? By candle closure, I mean the body of that candle, not the wick. So if the wick goes below it, there are times where we will wick below a low, and that is another term that I'll go over in a different video. But we are not looking for the wick. We're looking for a candle closure below the low to signify that we have flipped trend. And it is represented by, I wrote out this 3 kind of phrase saying. So you're looking for, the pattern you're looking for is going to be like right here, we made a higher high, we made the higher low, the higher high, and then we made a lower low, right? It is the exact opposite for when you're looking for a downtrend to an uptrend, because if you're looking for that, you're looking for a lower high, right? So we made, lower low, lower high, lower low, higher high. So with a downtrend to an uptrend, feel free to write all of this down if you have notes or anything. A downtrend to an uptrend would be the opposite. So it would be a candle closure above the wick of the previous swing high. Instead of the swing low, when you're looking for an uptrend to a downtrend, it would be the previous swing high. So in this case, instead of looking for a higher high, lower low, now we're looking for a lower high, because we're in a downtrend. You're looking for a lower low, and then you're looking for a higher high to close above the wick of the previous swing high, which would indicate a break of structure to the upside, indicating that the trend has flipped. I'm probably repeating myself a couple times. I'm sorry, but really try to pay attention and understand what I'm saying. It's not insanely hard of a concept, but it does take a little bit of just kind of, the low, high, higher, high, lower, low, and all this, whatever, all the wording and everything can be confusing sometimes. If I could do it, you could do it. So, yeah. So that is what a break of structure looks like. You want to look for, like I said, the kind of 3 phrase kind of saying, if you're looking for a downtrend, you're looking for lower high to a lower low to a higher high. Uptrend to downtrend, you're looking for a higher low to a higher high to a lower low. All right, now I'm going to add one thing to this because it is something that I initially got really confused on. Remember how before I said that price can move however it wants. It can move like that. It can move like here. It can move like, whatever it wants. It can go all the way down here and up. It can go just a little bit up, whatever. This is all an uptrend. It looks a little sloppier, but it's all still an uptrend, right? Even though we came below this internal low, we did not get the external swing low, and we definitely didn't close below it, so it would not be a break of structure to the downside here. Now, when we're looking for a break of structure, right, I'm going to draw this out like this. Pretend we're talking about up here. Make the higher high, here, here, right? Now, if we go like this, and then we break below this swing low, that would be the break of structure, right? But if we go like this, and then we break below right here, that is not a break of structure that is valid. So, I'm going to scale it out a little bit more so you can understand that it could happen in like the middle of a range. This would not be a break. Even if this is a wick here and we break below right here, this is not a valid swing low because we never made a new swing high, right? Because this could still be represented in, if you're looking at it, as just the same as this to that again. And we never broke the previous swing high. The only way we're solidifying the previous swing high or low is by making a new higher high or a new lower low to solidify that previous, leg. But with that being said, let's do a couple examples. It might sound a little bit confusing, but I promise you're going to get it. So yeah, let's go to the, 5-minute time frame. We'll go from there, try to find a couple examples. Cool. So right here, we're in a downtrend, right? Lower low, lower high, 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 etc. Where do we flip from down to up, right? This is a perfect example, actually, of what I was just talking about with, we go up and then we make it go down and then we don't break that previous high and then we broke below the internal low, but we didn't break below all the way down to the previous swing. And I'll show you what I mean. So right here, lower low, lower high, lower low. The previous swing high that is currently valid until we make a new low below this low right here, right, is this high. This is the previous swing high. So all this price action that happens in here, we could go up all the way to right there if we really wanted to, and then come all the way back down. It would still be a downtrend, wouldn't be a break of structure yet, until we get the candle closure above the wick of the previous swing high, which would be, well, it's not exact, but there you go. There. So once all these candles can do whatever they want to, we can go up, we can go down, whatever, cool. In order to have a valid break of structure on the 5-minute time frame, we need a candle closure above this wick right here. So the candle that would signify that we have broken structure to the upside is not this one. It is this one right here, this green candle. Once this body closes above that wick, we have now broken to the upside. And as you can see, we continue to rally higher off of that. That is a clean break of structure to the upside. I'm going to find one more to the upside, and then I'm going to do another one or two to the downside, and then I'm going to move on. Okay, cool. So we're looking for a break of structure to the upside again. As you can see, lower low, lower high, lower low, lower high. Sometimes we'll chop a little bit like this, but try your best to understand where the recent swing low would be. So in this case, right here, use lines to make it easier right here. So still a downtrend, even though we're making really small ranges down here. The previous swing low that would be the most valid would be right here, right? Or I'm sorry, the previous swing high that would be valid would be right here because we've made a new lower low, okay? So once we find a candle that closes above the wick of, I'm going to try to use the lines here to make it easier for you, but just remember, you're going to be looking on candles. Once we close above the wick, which would be technically right here, this is the previous swing high. Sorry, I got a text. We would be breaking structure to the upside again. Now, it's not, like I said, it's not always going to be the cleanest thing you've ever seen in your life. It will be a little sloppy sometimes. So I'm sorry, not there. Cool. Higher high, higher low, higher high again, lower, I'm sorry, we're in a downtrend. Lower high, lower low, lower high, lower low, higher high. So like I said, that pattern that we're looking for, lower high, lower low, higher high. So the candle that we break structure on would be technically this one because this one did not close above. So after we break structure to the upside, now we're looking for a continuation higher. And as you can see, we continue higher. I'm just going to do one example of a break of structure to the downside because I am running out of time and YouTube does not let me post insanely long videos yet. I wish I could, but I can't. So I'm going to do one to the downside and then we're going to kind of go from there. So, okay. Great. I'm going to actually use that because technically did great. Cool. So as you can see, we're in an uptrend, right? Higher high, we broke structure on this candle. If you couldn't tell, broke structure right here on this candle because this is the previous swing high, right? So broke structure to the upside right here. Then we said, okay, higher high, higher low, higher high, higher low still. Didn't break the previous swing high, right? So I'm going to draw it out for you again. Actually, no, I'll just do lines because you can see it. Higher high, higher low, higher high, but then we don't come up and make another high. So this is not the valid swing low. This would be the valid swing low. We're looking for a candle closure below the wick of this swing low. So I'm going to go back to candles just to show you. So we're looking for a candle closure below this right there, if it'll place. So we don't get it here, we don't get it here, we don't get it on this wick below, we don't get it on this wick below. Where we do get it is on this candle closure. Finally, we break below it, and we are now broken to the downside. The trend doesn't have to continue for an insane amount of time. We could go right back up like that, but we did continue a little bit lower and make a lower low, then a lower high, then a lower low. I've said this so many times, but okay. I'm running out of time. I gotta go, but I'm gonna try to give you homework really quickly. So if you can go and find 10 break of structures to each side, 10 break of structures to the upside, 10 break of structures to the downside. If you can go identify 10 uptrends and 10 downtrends. That will be pretty solid for understanding it. Just make sure you really understand what you're learning, because if you don't, it's going to just harm you in the long run. So really make sure that you're internalizing what you're learning so you can use it later on. So that is all for day 3. I will see y'all on day 4.